document up here. Let's see if we get some people up in chat here. I know many people have been asking for us to do this for a while, so it's going to be good to finally do a tax video.
For sure. Well, as much information that we can get out there is good and legitimate. To me, that's the biggest thing. I went on Reddit the other day, and there's some posts where I'm like, oh, you get it, and there's some where I'm just like, oh, my soul hurts. Like this please no, don't give advice if you're not a qualified tax professional, please.
I've seen so many people who are like pre 2012, 2013 or something, just like I've never paid any taxes, so you don't have to like.
Well, and I told you about the guy that sent me the message on Reddit that was like,
exactly.
Stop bleeding and stop trying to scare people. It's worked so far, like in all caps. I'm like, oh, you said so far. This is your year. You're going to get audited.
Exactly. No, they're stepping up their game this year. But anyways, real quick, I just want to say hey to everyone. We're finally doing a video that I've not only promised for a while, but I'm excited to do for a while as well. Today we have Drew from Archer Tax Group. He's someone who personally reached out to me a while back after hearing, I think you might have, I don't know if you heard or just were offering it, that I wanted to do a tax video on the channel. And he's volunteered to completely come on today, answer some questions that I've gotten commonly asked in the community. So we thought we might do it live, hopefully answer a lot of big questions off the bat, and then after that we can go towards answering questions in the chat. So keep in mind, for those of you watching, this is going to be a complete tax video. We're not taking a look at charts or prices or anything like that. So anyways, Drew, very happy to have you here. You want to tell us a little bit about yourself real quick?
Yeah, so I'm an enrolled agent. I've been running Archer Tax Group for about 2 years now. I've been in taxes myself for about 5. A mixture of dealing with back tax issues, doing some kind of off-the-wall consulting, especially in nuanced tax law like truck drivers, things like that. So I have a very big feel to kind of go outside the box. Obviously we do everything above board and things that are legal that we can easily defend, but definitely look for kind of every little dollar that we can find as far as keeping money in our clients' pockets. So we've been very successful at that. Crypto has been a really fun space to be in because, in my opinion, there's not much that changes in tax law this year excluded, with the updates. But this feels a little bit like the wild, wild west, and being able to read the law and interpret the courts has kind of given me, in my opinion, a little bit more of a, not just compliance based, but also here's how we can kind of interpret how the IRS is going to start treating this in the near future, because they haven't really given much guidance other than one notice.
Exactly, yeah. With the new tax law and stuff, I think it's important to understand the ramifications, because there are some new things, at least from what I've been able to tell in regards to the new tax law. So I guess
certainly.
So we'll go ahead and I guess we'll just jump through some of these guys. I had asked some of you guys in the comments about some common questions that you might have, and of course I already could assume many of the questions that I'm asking myself could be questions that you all have as well. So I guess we'll go ahead here, and Drew and I prepared some good questions and answers. The first one that I commonly get asked is, what is the tax rate on profits gained according to the IRS? And this could include just for simple Bitcoin trades or Ethereum trades, or even further altcoins where you're trading Bitcoin and other altcoins as well, because apparently you have to pay taxes on those as well according to this year. So Drew, you want to take it away?
Yeah, so with cryptocurrency, it's treated as capital gains. Depending on whether or not it is held for a year or more, determines whether or not it's a short-term or long-term capital gain. When we start looking at short-term capital gains, now we're looking at basically your marginal tax rate. What do you pay on every dollar that you earn of wage income? If it's held for less than a year, that's the standard that we have to apply to your cryptocurrency. Now that will vary depending on, are you a married filer, or you had a household, or are you married filing joint, are you married filing separate, are you single? I did give a link for the charts there. I don't think everyone wants me to sit down and read through. If you have $10,000, it's 10% tax. If you've got $15,000, it's, so I would encourage you guys to look at that. The long-term capital gains and the real strategy here is, if you can basically sit and hold for a year, I know that's a lifetime in crypto, under $77,000 under the new tax law of gains, if you have no other income, it's 0% capital gains. So there's some things that you can do there that, if you can bite the bullet and hold, it's really beneficial to do. But most of the guys that I've talked to, they're day traders, and I think they hold on to it for an average of about 15 seconds before they sell it. So we're doing a lot of work to figure out what those gains are, and as you trade up, you do get additional basis even though you're paying the taxes on it. And I think we're going to jump into another question here kind of about that. There are some benefits to tracking coin-to-coin trades as far as the taxes go, because sometimes you can have some losses pulled out of that actually benefits you overall.
Yeah. I was going to say real quick, as Drew was mentioning, guys, in regards to keeping up with all the information for things that we don't answer, we have a lot of resources and links down below, both to Drew's website and then also to a few IRS different documents and stuff that you can go through and keep up to date with all the questions we're talking about today. So I guess we kind of talked generally about altcoin profits as well, how you can deduct deduct losses from that. Another question that I get asked a lot commonly is, if I don't cash out, will I not have to pay any taxes on my profits? So if I just hodl strong and don't do anything, will I have to pay any taxes?
Yeah. So if you're holding, I mean, if you're not trading anything, if you buy Ethereum, if you're lucky enough to get in when it was $10 a unit, and you basically sit on it for a year, in that tax year in 2017, there wouldn't be a taxable event. If you were just buying and holding, you're good to go. Now, if you start trading it, or you sell it and then buy into something else, or trade Ethereum for Bitcoin or Monero or whatever, your coin of choice is, there's going to be a taxable event in there. And that's one of those things that we have to really balance is, what is the long-term strategy?
Mm-hmm. Okay. I got a question here from Rob Otto, who said, is there a ballpark percentage that I can use when determining if it's worth taking profits? Example, I want to sell at 0.29 but hope to buy back and say at 0.20.
I wouldn't say that there's necessarily a hard and fast number. Obviously you want to make sure that your transaction fees aren't higher than the gains that you would basically be taking. You're only going to pay capital gains on the gain, not on the actual sale price. So, if you buy in at 20 and you sell it, 20.9, you only have a 0.9 gain that you have to calculate. If you wanted to get really, really creative with it, technically you could probably get some rounding errors in there. Anything under 50 cents is going to round down. I haven't seen anyone try that strategy. I wouldn't maybe necessarily recommend it, but that might be something to consider too, is if you're doing little bits here and there. Obviously, you have to kind of value what your time is worth to go through and do
exactly.
that. But it's based on the gain, not on the actual sale price.
Awesome. All right, let's see here. Our next question was, how big of a portfolio or position in crypto do I need to really have to really justify paying taxes? So I know people who have $300 to $400 worth of cryptocurrency. Some who have are whales in the space that have millions of dollars. What would you say to that, Drew?
I would say, honestly, if you've got taxable transactions, you should be reporting those. You don't have to report the fact that you bought, but if you buy and sell or buy and trade, absolutely report that. I've got quite a few clients right now that we're having to go back all the way to really 2013, I think is the farthest back I've had to go. And because now their portfolio is worth $4 million, back when it was in 2013, it was, $2-3 grand that they've been trading up ever since. And now we have to go back, and not only are they going to have to pay capital gains on the things that they traded, it might not be that much as it seems, but you're going to have penalties and interest that accrue as well. So if you've got gains and you've been actively trading and have taxable transactions, we really need to be reporting those. I know it's not fun. No one gets thrilled about paying taxes, but it makes it easier for you in the long term, especially if your crypto explodes. And I think a lot of people are kind of realizing that here in 2017.
Exactly. I know that there was the number the IRS had released a while back. I can't remember exactly what it was. It was some kind of double digit in the thousands. But again, guys, it is good practice to just pay a portion of your income and stuff that you should, just not have to worry about the hassle of it, because as much as I think we all don't really like the IRS too much, it's much less hassle to have to deal with it later. And the other thing too is, with the fact that they've kind of gone after Coinbase, they've asked Coinbase, they basically sued Coinbase. They didn't really ask. They sued Coinbase for the records of anyone who had $20,000 or more of transactions from 2013 to 2015. That's what it was, yeah. Believe they've hired out a company called Chain Analysis to basically build custom software to basically scrub the blockchain. And now that they've got the intro data, they can kind of get in and start seeing where things are at. I don't think it's a matter of if the IRS is going to find people. It's a matter of when they are. If you're looking at a substantial amount, that becomes criminal tax evasion. They can really push that out. There's no statute of limitation on that. It's much easier to claim it ahead of time. And like I said, it's not fun. No one enjoys paying taxes, but honestly, if they're going to be looking, if you bring them the information ahead of time, you get a lot more leniency, and we can really kind of set our own narrative and basically say, here's what the trades were, here's our data, you have to prove otherwise, instead of them coming and saying, well, now you have to prove otherwise. So it makes it a lot easier to kind of get ahead of it and stay ahead of it. Definitely. I agree with that. Okay, so our next one up on here was, what's the best way to keep track of my trades and calculate my taxes?
So personally, I use Bitcoin.tax. That is the software that I've seen, at least the support that I've had on it. The guy gets back to me within 48 hours. I use the accountant version. The really nice thing is, if any of my clients decide that they want to try their numbers on their own first, they can link it back to me, and then from there, got somebody clawing at the door again. Hang on. I have three cats, and they all love to be on camera. With Bitcoin.tax, it really does help. I think it does a good job of tracking the information. In my opinion, it's a little bit like an F-16. If you know what you're doing and you know how to fly it, it's a great tool. If you don't know what you're doing, you got to be real careful because you might slam into the side of a mountain. So, with the fact that I can kind of jump in and help make minor changes without having to, you don't have to pay me to sit there and basically sift through it. My clients have really responded well to that. They really like it. And it's only $20. I think Coin Tracker's 3 or 4 times more for essentially the same software, in my opinion. But that's what I use. That's what I would recommend.
Yeah, I've generally heard about people recommending Bitcoin tax because right now, I mean, like you said, it's still early in regards to keeping track of all that, but having something there as a software application that can just track it all without having to record everything on a spreadsheet by yourself. It's good to have something that can kind of guide you like that in regards to your transactions. Can you synchronize with Bitcoin tax? Can you synchronize with your exchange accounts?
Oh, sorry, it kind of cut out there for a hot second.
Oh, you're good. There, cool. We see you now. But I was gonna say,
I can.
Oh yeah, sorry.
I can see you now. Sorry.
Oh, there you go. But yeah, so I was curious. In regards to Bitcoin tax, can you synchronize with your exchanges so it automatically plugs them in like your trades, or do you have to still manually enter it?
I've seen a couple where you can at least generate an API key. I haven't seen, I'll know in the next couple of weeks here as we get the final numbers for 2017. Usually I try to set one point in time, get everything to balance as far as the accounts go. That way we're not having extra Bitcoin carryover from periods where it didn't. But it's fairly easy to update. And if you're uploading it directly from the exchanges, there is an option to basically purge all the data from one specific exchange and then bring in all the new data so you're not having repeats.
Okay.
So there's been a couple API keys. I would assume that those would automatically update. You might have to manually authorize them to do that, but then you don't have to necessarily worry about, I got to put it in a CSV and manually upload it.
Well, that's good. No, that's good. They have API keys you can just simply plug in. That'll definitely save time from having to do it manually. Let me see real quick. I think we had one good donation question that came up here. I just want to make sure I don't miss it. Might have missed it. I'll see if I can. Actually, I can click on this right here. I'm thinking, nah, it's not coming up for some reason. Okay. Well, anyways, let's go ahead and continue through the questions here. The big thing that I also get asked, and this is more specific, it's not really tailored towards traders, is the question of taxing on mining profits. So if you have a mining rig somewhere in the United States, do you have to pay taxes on it?
So with mining, it ends up being a pretty big bump. It gets treated as self-employment income. It's not necessarily treated as trading income. You pay the fair market value at the time that you receive the reward as business income on a Schedule C, or you set up an entity. You can do an S Corp, you could do a C Corp. Don't do that without talking to your tax professional. That's definitely something that you want to get some input on. But then once you have that, basically that as you treat as your income, subtract out your expenses for mining rigs. There's some fun things that we can do as far as hiring on kids or getting a little bit more outside of the box. That's where we can have a little bit of space to play. Though we can look at basically what the profit is left over. You pay self-employment and income tax on that, and then you have your crypto basically at fair market value. That when you sell it, once again, if it's a year and 1 day, now all of a sudden it's at long-term gains.
Okay, so with mining and stuff, it serves as capital gains, kind of like how you would if you were investing.
Correct.
Okay.
Right. It basically converts to an investment once you've paid the self-employment tax on it.
Oh, okay. Awesome. Alrighty. So the other big thing as well that we get, and I guess this applies to myself as well, seeing as I do accept tips and donations, are tips and donations in crypto tax, much like they are comparative to taxes with dollars and any kind of traditional fiat currency? Well, my connection's probably cutting out here.
Sorry, you cut out. You're saying tips and donations?
Yeah, tips and donations. Mm-hmm.
Okay. So with donations, as long as they're going to a verified charity, it can't just be somebody going, "Hey, I'm a charity." You can absolutely write it off. There's two kind of ways that you can do that. Essentially, you can either give it to them at your basis, and there's not any kind of gain that has to be calculated, you get a lesser deduction. The other option too is if you donate it to them at the current fair market value, you would recognize that gain, but then you'd get an offset essentially if you're going to itemize your taxes. If you're going to give, $20,000, or you've got a combination of some of the state tax, some of the home mortgage, things like that. If you're itemizing, we kind of have to balance that and say which one's going to be better. If you're going to itemize, we definitely want to take the fair market value because you'll pretty much get a dollar for dollar deduction, and you'll get a lot more bang for your buck. Tips, they treat it basically as a sale. Honestly, they're kind of de minimis. If you're tipping somebody $100, then we'll definitely have to treat that as a sale and recognize those gains.
Mm-hmm. All righty. And we got a question here from Rob Otto who said, if I traded a $500 profit from Bitcoin to Litecoin in 2017, not 2018, is that a taxable event? I'm assuming he's saying in 2017, or does that require just to start in 2018? So I guess take the action in 2018 to record it.
Yeah. So when you are paying your taxes for 2017 in 2018, this is where it gets a little bit confusing sometimes because you're always filing the year after it's done. Mm-hmm. If you've got $500 of gain baked into, let's say you bought one Bitcoin and, once it goes up 500 and you buy, 2 Litecoin with that, you have to recognize the gain on the Bitcoin, that $500. You would pay that on your 2017 return, and then you would get that Litecoin at fair market value. So if you hold on to that Litecoin and it doesn't go up in value, in the magical world of crypto, if something were to stay stagnant for that long, I would be a little bit concerned. But if it were to not change in price and in 2018 you were to turn around and sell it, there would be no tax on that Litecoin because there's no capital gain. Same thing, if it goes down in value, you'd technically have a loss. And if it goes up in value, then you've got an additional gain there. So you'd have one taxable event in 2017 and then potentially one in 2018, depending on what you do with that Litecoin.
Okay, cool. We got another question here from Harpreet Hare who says, is there tax exemption on capital gains for small business owners? Example, if I own a convenience store.
So there's not really an exemption per se. We could definitely look at, if you're trading, let's say a pack of juicy fruit for Bitcoin, you have to recognize that as income, as revenue. You'd subtract out the cost of the juicy fruit, subtract out your, rental expense for the space, your employees, things like that, to basically whittle that down. Once again, it's just like mining. When you receive that coin, it's treated as income. Mm-hmm. You get it at the fair market value. And then if you decide to sell it later, if there's a gain, you pay capital gains. If not, there's a loss, but you have to treat that as actual income. Okay. I take a lot of crypto as payment for my services. So there's been some great, times where, I get it low and, I wait 3 weeks and all of a sudden it's doubled and I basically get a double fee, but I only pay self-employment taxes on the portion that when I received it, less all of my operating expenses. So that's, for small businesses, it's a really great way to kind of get a little bit more bang for your buck, but you have to have the stomach for the volatility because for as many times as it's gone up, I have had it too where I get it at an all-time high and then it drops down $100 and I have to basically take that hit on it if I decide to liquidate it for fiat.
Okay, cool. Well, I think, Drew, we did a great job going through the main ones here and then answering some of the questions on the side. I guess I'll go ahead and we'll take 1 or 2 more questions here through the chat. I'll dive through and see if I can find some good stuff. Well, here's a funny one. Someone, Jay says, wouldn't they need an army of tax accountants to track every trade by every person? And I think
yeah, to a certain degree. Honestly, less than 1% of returns get audited. I think if the IRS hadn't gone so hard and fast after Coinbase and didn't pay, I think it was like $2 or $3 million for custom software to track it, I would be, go for it, man. And honestly, it's going to be better to stay ahead of it. I've won several audits. At this point, they don't come and audit you. They don't really come in person unless you're a potential criminal evader. They're all done by mail. They're done by correspondence. We win a lot of audits just by showing that we've got plenty of proof. I mean, if you print out exchange reports and say, here's what I've got from Bitcoin.tax, and it's a nice, concise report, and here's all the base information, and that packet thuds when it hits their desk, you're probably going to win your audit pretty handily. So being proactive, being able to kind of set your own pace is really going to make a difference for you in those issues if they do decide to audit you. If you're coming from a point of, well, we found all these transactions and now you have to prove your trades, you're going to be in a much worse place.
Okay. Alrighty, let's see if we get one more question here. If you guys got any questions, put it in chat. We've gotten some really good ones so far. Oh, here's a good one. This is something I guess we didn't cover that's pretty common. If I withdraw coins from exchange to a hardware wallet, is that a taxable event? So the transaction of sending it from one place to the other.
Right. So with that, you can add in if there's any fees as part of the expense to reduce your or to increase your basis.
Okay.
But when you move from one wallet that you own to another, that's like taking gold out of a safety deposit box
Doesn't
and putting
make
it in
any
another safety
transaction.
deposit. There's no taxable event there. Now, if you're starting to send it to you send it to your buddy down the road, that's a taxable event unless you consider it a gift, which you can gift up to $14,000 and not have to file any additional returns or information. We can easily flag those as gifts. But if we start getting over that amount, then we have to kind of start looking at the gift tax returns and rules surrounding that. So you can give gifts, but tips, you have to be very careful. You want to call it a gift and not a tip.
Alrighty. Transactions. Oh, I'm curious to actually ask you about this, Drew, because we haven't actually personally talked about this. So there's a lot of talk about decentralized exchanges. So a lot of things in regards to like atomic swaps and things where you won't need a centralized entity to make these transactions. What are your personal opinions, in regards to the concept of decentralized exchanges? Will they be able to be taxed if we have these decentralized exchanges?
I think it's one of those things where, that's going to switch the onus really onto the taxpayer to prove it. If you all of a sudden, I only make $10,000 a year, and you're living in a mansion with a Bentley. I mean, that's how they got Capone.
Exactly.
The guy didn't file taxes. I don't want to be the alarmist tax guy going, you have to pay me all this money to help you out. I'm just trying to make sure that my clients don't pay any more than they're legally obligated to, and that includes penalties and fees. If you start getting fast and loose with some of the tax law, and the IRS decides that what you did was wrong, and there's a substantial amount owed, and I think it's 10% change in total tax. So if I claimed $5,000, but I actually had $100,000 worth of income, you're going to get hit with what's called the substantial understatement penalty, and that's a 20% it's up to 20% of your taxes due, and it's not an easy penalty to get rid of. There's some that we can call in and say, hey, they made a mistake, this is their first time, can we waive some of these penalties? And they'll waive them, with a phone call. That is not one of them. The IRS does not like to give money back when they think that you're doing something potentially criminally wrong. So that would be, if anything, keep 20% more of your money by just paying your taxes. You might get away with it for a time, but you have to be really careful about, being that flagrant about not claiming taxes.
Okay. All right. Well, I think we answered a pretty good amount of questions, Drew. I appreciate it, man.
Hey, no problem.
I just want to say real quick, first and foremost, guys, thank you all for joining us in the chat and stuff, and very good questions. I hope we answered the mass majority of them. I'm trying to keep it short, so for those who want to come back later and watch it, they can do that. But for those of you who have stuck through and everything and still have some questions, please go down in the description of the video. We have a ton of resources linked down below in regards to resources for the IRS and stuff that could possibly answer some questions, as well as Drew's website, Archer Tax Group and stuff, so you can go through and answer any questions for yourself and stuff, maybe with the resources down there. And again, feel free to contact Drew and his team. I bet they'd be happy to. I think you said you could give out a free consultation. Yeah,
and so the link that I think is archertaxgroup.com/crypto. There's a form in there. If you guys just want to fill that out, that helps me kind of organize instead of having 14 phone calls come in a day. If we can get that form in, that'll at least give me an idea of where to start with the conversation with you. If you want to add an extra question in there, I'll add a box to have a specific question answered. We'll give you a phone call within 48 hours. Free consultation. We don't want to pressure anyone into, you have to use our services before we help you, because we believe that you guys are entitled to your money. We want to make sure that you're keeping it in your pocket. That's just how we've always operated, and that's how we're going to continue to operate, is just getting information out there. If you're another CPA or tax professional, feel free to reach out. I want to help you understand this as much as possible so you can help your clients as well. We're happy to help other like-minded people.
Awesome. Well, anyways, Drew, thank you very much for coming on. I hope you guys, hopefully you guys get some answers or some questions answered and stuff, and hopefully we can make this very complex topic and stuff seem a little bit more simple, a little bit more of a breeze and stuff through the video. So anyways, thank you guys for tuning in, and I'll see you all in the next one. Stay tuned.